Hey, this is Jack. I wanted to do a quick trade recap for Palantir that I took today on, what is it, Wednesday, April 30th, 2025. It was a really killer swing trade, and I was able to trade it and trade aggressively because I understood the type of day that was unfolding, and I understand the type of day that's unfolding because of all the information I've learned from Al Brooks and Ali Afshari and Brad Wolf and James. And I've been reading Al's books again recently, and this time taking notes, making slides, and I'll also make quizzes of them as well to really integrate the information, because I've heard everything that I'm about to tell you over and over and over, but it's a little bit different to connect the dots with the actual live trading part of it. It's all abstract until you go to the chart and see it and understand what's taking place. So I wanted to do that, and so I have Palantir here, and I noticed that on my little stock market scanner that I've built, I just follow a handful of stocks and a handful of indexes to trade. And I noticed that Palantir had a pretty significant amount of bullish control, more so than bearish control, and we were always in long. And the day's range was only about a third of the average daily range for the opening range. So I clicked on Palantir here and took a look. And when I came to the charts, I was looking at the 5-minute chart around 10 o'clock, a little after 10 maybe. And I saw this wedge forming right here. We have a big gap down, and we have a strong bull reversal. And we made a wedge bear flag. So this should break to the downside, and we should get a measured move down of the wedge, or at least a test at the bottom of the wedge for a trading range day or a bear trend day. But instead we get the upside breakout. We get strong breakout here with 2 follow-through bars. And when you look at that, you say, oh wow, okay, yeah, breakout and follow-through. But when I look at that, I say, oh wow, we have a strong spike. I see a spike, a textbook spike. We have 5 strong bars with little overlap and gaps, and all trending higher. So that's market control by the bulls. And we also have 113.24, which coincides with the top of the wedge here. And 113.24 on the daily chart is where the bears sell signal triggered from the big gap down. Now, the market was closed overnight, so maybe bears aren't actually selling below yesterday's low, but I don't know that. Maybe they are. And to me, price action is the same on any time frame. So to me, this is a sell setup that triggered for the bears, and now we're reversing up, and we're breaking above that on the 5-minute chart. And then if you look at the 60-minute chart, the open of the day, we have a big gap down. Well, if you drew a line to connect that low and dragged it up, it coincides with the highs of the prior day where we pulled back and where the big gap down came from. And if I can extend this a little bit without screwing it up too much, if you just look at the 60-minute chart and say, well, what are we doing here? Well, we had a tight trading range and then a breakout test, and that led to a spike in channel pattern. And this spike in channel pattern was so tight that this turned out to be a spike, and this pullback here, let me see if I can make it a little bit easier to see. But anyway, that pullback, this pullback here ended up being the start of the channel. So this whole thing could be a spike pullback, and now we're about to channel. And with every spike in channel that you get, if you get consecutive spike in channels, the channels are going to get broader and flatter. So that's what I thought might happen here today with Palantir on the 60-minute chart. Then if you look at the 2-minute chart is pretty interesting too. If you look back at the wedge, you can see a very clear wedge, very clear wedge top, and pretty strong spike here, 3 strong bars, pullback, and then some more follow through. This was the spike on the 5-minute chart, and it corrected sideways, and it tested the bottom of the channel. This on the 2-minute chart is a spike breakout of this wedge. This wedge was completed as of this bear bar, and we got a spike pullback channel that corrected to a trading range, testing the bottom of the start of the channel, also the trend line for the wedge. and we broke it, but the breakout failed and reversed up. So that told me that, hey, this might be a trend that lasts for a few hours. So this is a pretty good swing setup. But the 2-minute chart doesn't really matter. You'll lose money if you just trade the 2-minute chart, probably. And it's better to just look at the 5-minute chart. So I focus primarily on the 5-minute chart. And what I did was bought the close at not the best place. I mean, it's right below the moving average. But to me, I'm buying the close during a strong bull spike. So I don't care where I buy necessarily. And I just put my stop below the breakout bar here. And I was able to make 2 times my risk on the trade. I exited up here. But after we got this spike, we had a sideways correction that formed an expanding triangle top. And we have a failed low 3. We have a low 1, a low 2, and then a low 3. So if this expanding triangle top and this low 3 fails, it's probably likely that we'll get a measured move up. And look at that. We got pretty dang close right there before we had a larger correction. But more importantly, at the time of buying the spike here, I thought, well, what type of day are we about to have here? And that's primarily why I was able to hold all through this trend and pullbacks up to my target, which was the close of the prior day and a big round number, 116. You can see that 115 was an important support and resistance here, and 114 was a magnet. We oscillated around the middle of 114 here, and also 113 coincides with the breakout point of the wedge. We have it right about here. So anyway, when I thought about the day, I thought, well, we have a strong bull bar after a big gap down. Even though it's a wedge in a trading range, that's a variation of a trend from the open if you get a bull breakout of the bear flag. So I thought at a minimum we would have a trending trading range day. And when you have a trending trading range day, the day usually starts as a trading range and has a fast breakout, and then it forms another trading range. So at a minimum, I thought buying here with a stop down there was safe because this is a lower trading range. We have a fast breakout, and now we have another sideways trading range. And if we just keep doing that over and over all day, eventually we'll grind up to the close of the prior day. Usually with trending trading range days, you get several trading ranges, and it's a weaker type of trend than, say, a spike and channel trend day, but it has spike and channel trend components. This is a spike, pullback, and a channel. Multiple channels, but one big channel. The trending trading range day is the most common type of trend day, so it's really important to understand it. And some form is present on every trend day. Sometimes there's multiple breakouts, multiple trading ranges, and when that happens, it's better to think of the day as a stronger type of trend day, which is what we had here. You could say that this was forming another trading range, and it did, and it is, but this trading range is not the same as this trading range. This is much smaller and weaker than this one. Every wedge is a trading range. Every expanding triangle is a trading range. Every wedge channel is basically a sloped trading range, and every channel is the first leg of a trading range, and this is the second leg here, the correction. So anyway, a trending trading range day is usually another type of day. This is also a reversal day, and sometimes you get breakout tests that pull back into the prior range, and we didn't get that here. This pullback stayed above that range, the top of the wedge, so we actually have another breakout gap here. But we have a small breakout gap here, right at the top of the wedge. We formed some other ones here that I drew, but those are less important than the bigger ones, like the distance between this trading range low and this trading range high. That's a much more important gap. And the same here with this trading range low and this trading range high. There's a gap, and that's much more important than these smaller ones. And I've been learning all this stuff from Al's books. This is also a variant of a spike and channel trend day and a trend from the open day. The day usually has a small opening range, about 1/3 the average day's range. There's usually a strong spike early on in the day, and the high or low of the day usually forms in the opening range, which is what we have here. The spike is usually followed by a channel that can last all day with very small pullbacks, and that's exactly what we had here. This is a channel that's lasting all day so far with very small pullbacks until here. when we started to get this pullback, I thought it was more likely that we would start to evolve into a trending trading range day and start to have more trading range price action at a lower slope. But it looks like the bulls are still pretty strong, and this is probably going to end up a spike in and of itself, meaning this is the first pullback, and this will be the channel higher that gets a measured move of the spike. And the spike could be from here to here, and it doesn't really seem like it at the time, but we could get all the way up here. I don't know why I have this marked. I don't know what that is. But anyway, I digress. Let's keep going. I have more to say about trend days. This is important. You know, every day begins as a trend from the open from the first bar. If it's a big trend bar, it doesn't matter. Every day begins that way. So this, you know, at this time, at this moment in time, this 5-minute bar is a trend from the open. But usually there's a reversal on the open. That's much more common. But it's important to just keep that in mind. Just think about it, because this is a variant of a spike and channel pattern trend from the open. Sometimes there's a report around 10 o'clock that can lead to, and that's Eastern time, that can lead to a breakout, a reversal, or a large outside bar. And here's about 10 o'clock here, this bear bar, and it led to a big reversal. And that reversal was a spike. This is 10:05 right here, this bar. And that led to a 5-bar spike and channel. And that can last all day, but it can also come before or after the report. And you can also get a reversal after that if it's too climactic. But here we didn't have a too climactic of a spike. This was just right. And it's also a reversal day. We have a big gap down, and we have the first bar of the day, a big bull bar, so it's a reversal. And usually there's a trend in one direction on the open on a reversal day, and then a relentless trend in the opposite direction for the rest of the day. So, and even though that this didn't form a trend from the open bear, it's still a variant of a reversal day. You can think of this as an attempt to have bear trend resumption because it's a bear flag. And this is a reversal day variant. You know, usually a trending trading range day is a variant of another type of trend day, and usually a reversal day is a variant of another type of trend day as well. And that's all important to understand. And most reversal days start out as trending trading range days. The market can enter, you know, a runaway breakout trend mode where it just trends relentlessly with minor pullbacks. And there's usually large trend bars and very little overlap, and mostly small tails, and that's what we have. We have big trend bars in the spike and in the channel here. Very little overlap with those spikes. And if you recognize this type of day, these type of strong trends, you got to enter quickly. This is really important. Even if it looks climactic and overdone, it's because it's going to continue to get even more overdone. So when I bought right here, right below the moving average resistance, the midpoint of the gap, this dashed line, the open of the week, this small yellow dashed line, you know, breaking out above the daily chart sell signal breakout point, buying at all that resistance is actually a good idea, because even though it's climactic and overdone, you could argue, it's going to get more overdone. You know, it doesn't matter because of the day expectations, not just the bar by bar expectations. You know, this spike in and of itself doesn't really matter as much as the expectation for the day. I'd say the spike is equally important to the expectations for the day, because a spike in channel can look a lot of different ways, many different ways, many variations. So you got to enter quickly, and you should swing most of your position. This is also incredibly important. Swing most of your position and trade these breakout spikes very aggressively. This is what Al wrote in his books. These are his words, because the move can go very far. So that's what I did. I went in aggressively, and I just held until I got to my target, because I knew that this is likely a trend from the open variant, and this is likely a spike and channel pattern. And since we're staying above the moving average with small pullbacks, it's very likely we'll get to this close and maybe even exceed it, in which we did, in which we are. And even if I'm wrong and this is a weaker trend than a spike and channel trend from the open, it's likely to be a trending trading range day where I'll be able to exit with a profit that makes sense. And maybe we'll get consecutive trading ranges and grind up here anyway. It might just take all day. We might have a more broad channel stairs type of day, like what we had on the S&P 500 yesterday. That was a broad channel stairs pattern day. And so anyway, aside from all that, what else is going into this trade? This is a really long video because there's so much to go into it. So I just talked about day types, but there's still more. There's magnets above. I talked about the close of the prior day. Well, there's also this measured move of the opening range. That was the magnet I was aiming for, along with the close of the prior day, and 116, a big round number. So there's magnets above. That's important to understand. The high of yesterday, that's a magnet. There's also a strong micro channel on the 15-minute chart. So you could see at any point in the day, we were in a micro channel all the way until here, about noon, give or take. And so that's a sign of strength. And that was also the case on the 30-minute chart over here. We have a doji open, a trading range open, and then a strong bull spike. And that spike was followed by a channel. And if you can see that pattern on this time frame, it's likely the pullback will do this. We'll find buyers below the low of the last bar in the spike for a test of the high at a minimum. You know, and that's what this was on the 5-minute chart. This was the first breakout below the low of the prior 30-minute bar, and it led to a new high of the day. And that's a common pattern with a spike and channel pattern. It's just that what you're seeing is the 5-minute chart version, and this is the version on the 30-minute chart. And this is all really important to understand. Anyway, you know, the most important thing is the day type expectations and what to look for, because that expectation applies to my trading time frame. This is the most important time frame. You know, on strong trend days, the swing setups are 70% likely to work, which means that you have a 70% chance of making 2 times your risk. And that's what I did here. And these are Al's words from his book. You know, I've read through his book. I've read through each of them a little bit, but I haven't finished them. I need to finish them. But it's just kind of mind-blowing going through them again and picking up all these little details that really add up and are important. And there's a lot of smaller patterns in here too. Like, let's talk about the expanding triangle top. Well, what are your expectations when you get an expanding triangle top? Well, it's a strong trend day. It's probably just going to evolve into expanding triangle bull flag, and that's what it did. It's probably likely to lead to a minor correction in a trading range at best. So this was an expanding triangle bull flag. And then here, this is a micro channel spike. Well, a spike is likely to be followed by a measured move up in the form of a channel, and that's what it did. Now, how about this tight trading range or this one? Well, a tight trading range and a strong trend is likely to become a flag for with trend setups, and that's exactly what happened. Every reversal setup failed, and all the with trend setups worked. And that's a common in strong trends. Reversal setups look better than the with trend setups, but ultimately they fail and become with trend flags. In strong trend bars, there's a lot of strong trend bars in the other direction, right? Like here or here, but ultimately these are going to lead to failures and losses if you try to trade counter trend. So it's really important to understand all this stuff. Now, really, I'm going over all this for me. This is for me. I'm sharing it with other people, hoping it's helpful for you. So I'm sorry if I'm just ranting and just going on and on and on. But all of this stuff added up to why I was able to do it, and I really want to integrate that so I can do it over and over and over. So yeah, what about this wedge channel? You could say that this is a wedge top or this right here, right? Well, ultimately they're going to fail and become with trend flags, and that's ultimately what happened here, because this is a strong trend day. This is a strong spike and channel trend from the open, and that is the strongest trend day there is. I mean, this breakout test of the moving average and the start of this channel makes me think that it's more of a trending trading range day at this point, especially because we're getting close to an average day's range. We're about 95% an average day's range for Palantir at the moment. And probably we're going to start to have a bigger correction, maybe down to here, or even down back to here, the start of the channel. Because usually you get 2 p.m. coming up, and that's about 7 minutes from now, and you start to get these bigger corrections. And all this is really important to understand. You know, on strong trend days, trading ranges are continuation patterns, and on a higher time frame at a minimum, but also on, you know, obviously your trading time frame. And it seems like also too throughout here I was thinking it's kind of hard to get to the moving average. You know, we haven't touched it for a few bars, and that's a sign of strength on strong trend days. And usually moving average gap bars don't happen until later in the day, around 2 or 3 p.m. On strong trend days. And that seems to be what's happening here. We had a test, but we don't have a moving average gap bar. We don't have a close below the, we don't have an entire bar below the moving average yet. So we're just not able to get there. These are all signs of strength. And then there's also, you can focus on breakouts. Well, what do the breakouts even mean? We got to break out of that high. We got to break out of that high, break out of that high, break out of this high, break out of that high, a break out of this low, break out of that high. But what do these breakouts really mean in and of themselves? Ultimately they failed. Look at this one. This broke out and it pulled back, most of the range of the bar. This one broke out and failed. That breakout failed. This breakout failed. It reversed up. This breakout worked. But the point is, the context is more important than the signal bars. And usually breakouts lead to sideways corrections and strong trends. And that's what's happening here. Every new high, we're getting profit takers and sideways corrections. And it can lead to a reversal if it's a weaker trend. Like here, I was wondering about it. But this isn't really a strong enough spike. So this was likely to fail. And I knew that. I almost got in on this high too, or bought the close of this bar, but I thought, I don't know. I'd rather just kind of chill the rest of the day and because I'm still learning all this stuff. That's why I'm making this video. And that's all I have to say. I hope that some of this information was helpful. And I hope that you can recognize this type of trend day. And I hope that I can continue to recognize this type of trend day and keep trading it. We can look at the 2-minute chart real quick. I drew this little pennant up here when we started to go sideways. But it's not a pennant. This is an expanding triangle. And then this is a bear channel, which is a bull flag. And then this is the bull trend line. So that's what I drew. I had my target up here to 116. So at the time, I was really cautious about what was happening because we're so close to my profit target. My risk is big. I need to either trail my stop, but where's the major high or low? It's not really terribly visible on the 2-minute chart, and on the 5-minute chart, we started to get this breakout. This might be a major high or low, but I don't know if it's major enough. And we're so close to my target, so I had big risk. And yeah, so it's a little tricky. But ultimately, it just led to a trading range and a continuation pattern. So anyway, that's the day, that's the trade. Thanks for watching.